Hey guys, Rajiv here from Financial Hub India. So in today's topic, I wanna talk about a particular trade lesson based on actually volatility, which is connected to the entry. So let's talk about it. So you'll get the idea what the topic is about. So first of all, just go through the Century Textile 6 minute time frames. Today's date is 25th of March, and this is the condition over here. So right now from here, if I just analyze the market, then this is the resistance and we have a support. So if I draw the line properly, then the line should be coming in here, and you can draw one more line here to make a zone. So all right, so in general sense, you overall uptrend, last higher low, we are looking for a buy entry on the support zone. All right, so this is a general view on this chart based on trading a volatile stock. Right, so this is a pretty much volatile stock. It was moving in a non-volatile structure, then volatility came in, and if you're going to buy it, then based on the 6 minute time frames, this is the support layer. We can go for an attack for a buy. That's one thing. Secondly, uh, regarding what if we wanna trade this sell off momentum, so that can also be tracked down. But I'll not go in depth of those things because today's topic in this video, my topic is something different. This is just to give you the overall view on this stock. So if we just go in, then we can see there is a key layer of resistance here for the market now. All right, so there was a pullback near to the key layer and then fallen back. So in case if you want to trade this momentum towards downside, then definitely we can go ahead with oops, sorry, horizontal trend line. Yeah, so this is the sell off momentum going on right now. Yeah, so you can track it down following the lower time frames, and till the time it reaches the support layer, we can go ahead for a trade. So this is a general discussion about the overall chart setups. Now whether we are going to initiate the trade or no, that depends on the price action context, and depending on what kind of trader you are trading a volatility, or you are trading a non-volatility kind of structure. So it depends on those areas. But these are what I discussed here. This is a general structure, general view of the overall Century Textile, what's going on, and in general the trading opportunities. All right, so you can specify based on our category, our kind of trading style. You can then look at the context and trade accordingly in there. All right, so today's topic is talking about the entries. Let me just take it down and make the chart cleaner. I'll just keep one line. Okay, I'll take that later. All right, so if you see from here, right, from here, the stock has a non-volatile structure, right? So you have a non-volatile structure. It's not giving you large pullbacks, pushbacks, right? Which shows the buyers are fully in control, moving up, moving up, moving up, moving up. And for the first time, we see the sell-off coming in right over here, right over here. Okay, the major sell-off we can see in the script for the first time after a move from here to here. So that's a long move, and I think let's say move from 15th Feb to 27th Feb, so around 10 days of move, and then we got the large sell-off. So in this large sell-off, the strategy triggers is the non-volatile structure strategy. So what do you do in that non-volatile structure strategy? We look for a strong non-volatile market, right? A non-volatile momentum going up, and then when it's moving up, we we look for the first attack from the opponent. So if it's a buying market, then we look for the first attack to from the selling side, and then the first attack is the opportunity for us to buy it back. All right. So in a non-volatile structure, this is one of the strategy you follow. All right. So why so? Because the first attack generally doesn't sustain. Generally, the first attack for a non-volatile structure, because since for a longer period of time the market is moving with a non-volatile structure, it's full of buyers. So the first attack from the selling side is supposed to be failed. That's what happens generally. All right. So based on the probabilities, based on the order flows, we initiate the position looking at the non-volatile structure and the first attack. So where we enter, obviously on the key level. Where is the key level? This is a non-volatile structure, so you have the key level over here. So get in the trade. Your targets can be first target, can be higher targets. That's secondary. Okay. So targets can be first target, second target, third target. That's up to you. How far you wanna move, but target starts right from here. Now, in today's topic, even this is not my things to discuss. This is like I had to say this because this was on the way. This entry was on the way, so I had to discuss this. Now, there was a non-volatile momentum. We got the first attack. It pushed back up. That shows the sell-off pressure failed in terms of the first attack, and the non-volatility continues. Now there is a difference between what happened in here and what happened in here. This is a long sustained sell-off, which this was not. If you compare these two, so this was like the seller attacked the market, immediately it bounced back. All right, so the orders, the selling orders were absorbed by the buyers quite I mean very much smoothly, which was not the case over here. This was 1 2 3 4 5 6 hours of sell off candles. It's almost a day over here. So in any way, since since we have been waiting for the first attack over here and we did that trade, then should we wait for the second attack? Generally, no. Generally, the first attack should be traded in that first attack strategy, in that non-volatile market, waiting for the first attack. In that, based on that strategy, we just trade once that momentum, and we don't initiate the second or third trade based on that concept, basically. So what do we see over here is that for the first time we see sustained sell-off. Now I'm coming back. I'm coming back into my core topic today. What I want to discuss. This was a non-volatile momentum, and then this, what you see is the first sustained sell-off momentum. All right, so that shows volatility is coming in inside market, and it's holding, it's sustaining with a sustained move. All right, so that was the first sign. Now, if we have been trading this market with a non-volatile structures or whatever the idea is based on the non-volatility we are trading this market, then looking at this structure formed here, we should be give our trading style a pause. We should be waiting now, because it looks like, okay, from a non-volatility condition, it's now the first sign we got that, okay, the price is now going to be volatile, and that's what happened. Eventually it goes up. All right, now when it goes up, generally when you buy the flip layers on the support, goes up, you buy the flip layers on the support. Yeah, generally when you do that, what we prefer is to buy the market with a retracement which should be smooth enough and not so much a deeper pullback. Right, what I mean by that, like here, when the market pulled back up, this is a breakout, and it came back down here with a pullback. So generally, this is not my buy entry. I don't like to prefer to buy it over here. Even though I'm trading a volatile market, since you know this was a non-volatile structure, then price moved up from here to here. Now, if you're going to buy on flip support, then obviously the price will come to flip support, then it will not remain a non-volatile market, because then this is a 50% retracement. So you have a larger pullback followed by the previous larger pullbacks. All right. So when the price reached from here to here, we already know that, okay, if we are going to buy on this support, then this will not be a non-volatile strategy we are trading. This is going to be a volatile market strategy we are going to trade. All right. Taking the, you'll have to create a zone over here, this one and this one. So this is one entry based on the volatility. Right now, by the time it happened here, you got these volatility ones, then you got the second volatility here, and the price well responded from the flip support. You got the 50% retracement over here. So now we can't say that we are a part of a non-volatile market. Now this is very much clear that we are a part of a volatile market. Now, when it's very much clear that we are a part of a volatile market, then we are supposed to trade based on the volatility. Now, what I mean by based on volatility, based on volatility means is that you look for deeper pullbacks to buy it, and don't trade a breakout, don't trade a small pullback for a trade. What that means is what happened next year. You buy, this is a resistance, you buy the flip support, then it moved up, and you have the next resistance here. Resistance, you buy it here, you have the resistance, there's a breakout, and where is the breakout? Here is the breakout. And are you going to buy it on this support? Now, my today's point is this one, that when you have this market structure, non-volatility, price turn to volatility, and well responded in terms of volatility from here, and then the next breakout, are you going to buy right over there, or you are going to wait for a deeper pullback? Now, deeper pullback means it can come down to here, or it may come down to anywhere in between these lines for the next dip. Now, are you going to buy in between these two lines? That depends. Again, that's not the topic today. Are you going to buy in these two lines between? That's not the topic today, because that's another chapter. But so far, what the topic is, when you see the non-volatility and then price convert it to a volatility, then the way you have been trading the non-volatility based on just a breakout and a pullback you buy, just a breakout and a pullback you buy, the flip layers. The similar way you cannot trade the volatile market structure. Here you cannot buy such a small breakout. If it would be this much, a long breakout above the key layer, then you have good enough chance to, you have a good opportunity to trade a pullback, because their swing, this retracement swing, corrective swing would be much longer, and we want that. We want a longer corrective swing to trade when it's a volatile market we are trading. All right. So when this mistake happen, when you guys start buying all the flip layers, just because there's a breakout and pullback, you're going to buy the flip layer, and you're not understanding the price action context, the scenarios, then you are going to be stuck. Then that's where it messed up, and that's why the understanding the price action context is very much important. Because if you don't understand the volatility context part here, then obviously you are going to buy on this flip support. You're going to buy on this flip support in any way, right? You're going to buy this flip support, you're going to buy this flip support, because you're just trading and buying the supports, the key levels. That's it, irrespective of what the market story is. All right. So so far since I don't see any key level in between, then obviously this is the layer where if you're buying, then you should be buying on this layer only. All right, now when you're buying on this layer, then there are some other things like, okay, we had a false break here kind of thing, this breakout didn't success, and then we have this trend build up a structure. Generally I don't like it. I don't like when the market falls to the retracement, falls to the corrective, falls as a corrective swing on the flip layer. In terms of, such kind of stability, I don't like it. Basically, I don't want to see all these things in the corrective swing. I like corrective swings to be like this, like this, just one or two candle, three candle fall, sell off candle. But because why I do that, because when I see such kind of lower highs kind of things, then that shows the stability of the sellers. So again, that's a different picture, that's a different story to talk about when you have this corrective swing, and then how to see all those things and all. So for today's topic, the idea was to share with you that when to buy at flip and when not to buy at flip, depending on the price action context. All flip cannot be traded, and if you understand the context, then you can decide, okay, which flip to trade and which flip not to trade. Because here this flip cannot be traded in any way, not based on volatility, not based on non-volatility, because this is an overall, I mean, if I just analyze this part, this is a non-volatile kind of a structure it looks like, but this is not a stable one. Basically, again, that's another part of the story. All right, so hopefully you got the idea that what I want to make over here. I'll see you guys on the next topic. Thank you. Okay, this is just to add with the previous lesson. This is Nifty chart. We have the similar example over here. So here, if you see, we have this non-volatile structure over here. Yeah. So this is non-volatile structure moving up, 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 and then we start seeing volatility over here. Volatility pushing in, and the same is being, I think, discussed in here as well. If you have been following, the gradual increase in volatility shows the seller's strength coming in and all these things. So we can start seeing a shift of the the price action context overall, from a non-volatile structure to a volatile structure over here. So this is the support area, this is the support area, and then price goes back up, and then if you're going to buy it, then this is the layer which is a good layer to buy in terms of the volatility, if you want to trade the volatility. But right now you see the price is trading, it opened with a gap down and trading below that only. Anyhow, that's not the point to make. The point was when the price was in here, and we see the first of its kind of volatility attacking the market over here, then is it advisable for us to buy a breakout pullback right on this layer, a small breakout pullback? Is it advisable? No. Because of what? Because of this volatility what we see over here. So if you're buying it right over here, you're doing a mistake, because you're ignoring the volatility just now came in inside the market. In this context, the right area to buy the market is this support level. All right. And then later on, after this, I mean, obviously, if you're going to buy the flip layer, then you're going to buy the flip layer right over here, right? So after this, things changed, the context changed, and something like that. So that's another part of this lesson. Now, similarly, it goes ahead with I think there should be a lesson on the breakout. I mean, if you see, because what you see here, this is a resistance, and then this is just one candle. And in general, if I talk, this is not the right breakout as well to buy a small pullback also, because right now the price is really testing. Just because it closed above the layer, right around that layer, it doesn't mean it's a breakout. So if at all we are going to buy a breakout, we at least want the price to move some space above the key layer, and not the price holding that level. This is like testing this resistance level. All right, so this is not even a small breakout pullback anyhow, but this is, I'm just telling you for an example. Even if it's a small breakout, and then on a pullback, are we supposed to buy it? We are not supposed to buy it. We are not, because of this volatility what we are seeing here, right? So that's the example from Nifty. And to understand, if I can see here, yeah, I mean, we can talk about this over here as well. This was also looks like a non-volatile structure. We are not getting much swings overall in this. And then you have this layer sell off. And then if you're going to buy it here, right over here, that's not a right entry because of the kind of volatile market you can see over here. Zoop, zoop, zoop. No. So no, not an exact example over here, but not an exact example the way I want to show you. It's not the similar case over here. Let me just see if I can figure out some more examples. So the overall idea is when you buy the flip, okay, the topic I was talking about here a few minutes back, that if you see this breakout, just to understand that how a breakout happens, even it's a small breakout, then this is a testing of the resistance, and this is what its breakout is. Why I'm saying that? Because if the candle would have closed here and price trading here, then I would say this is not a breakout yet, not even a small breakout. But I can see the price made some way away from the key layer, and we had a good amount of move towards upside above the key layer. The price had made some space, some gap from the key layer. We can see some kind of momentum towards upside and then coming back. So this is a small breakout example. This is a small breakout example, but I know there are people who are doing a mistake of considering these as well as a small breakout and pullback trade. They are going in inside here. That's not right. So that's one more lesson we covered in this video, that is about understanding the breakout space. Because when it's a long breakout, then you don't need to worry. It's a long breakout, you don't need to worry. This is pretty much simple. When the matter when it makes you confused is when it happens in a small breakout pullback. When it is like this, then you don't need to worry, right? It's a clear breakout, then pullback you buy. So that's not the matter of point. The matter of point is in here. Yeah. So this topic can be talked about in a vice versa basis as well. Like here you can see a non-volatile sell-off going on. Yeah. So if I'm a non-volatile market trader, then I can't expect the price to come here and I'll sell it here. Because if the price come here, this goes pretty much volatile. Way too much volatile over here. Even the first attack we have been talking about, you expect the first attack from the counterparty. It should not be so much so much long as a corrective swing. It should have a decent amount, like 20-30%. It should have a decent amount of corrections. All right. So this is a vast topic. Actually, it comes with different topics, different charts in a different way. But this is one of the way we look at it. So try to take some charts out of this and try to understand this part first. And once you understand 2-3 parts like this, then it's easy for you to understand the different kind of the other kind of variations over here. Okay. Thank you.